Okay, lads, from continuing on then from getting depreciation of buildings, we move on to the next work in here, which is work in 15, which we must do is a revaluation reserve. Okay, if you look over to the trial balance, you'll see that the land and buildings at cost used to be 850,000. So if they used to be 850,000, okay, you can see then in underneath it, you've got accumulated depreciation on land and buildings was 55,000. Okay, so at the beginning of the year, all right, we had our land and buildings to be worth 795,000. But at the beginning of the year, we revalued them to 975,000. So the difference between the two, okay, which is 180,000, is your finance by. Okay, and we already have here what goes into your fixed assets for buildings. Now, just as I was about to start again, I just noticed that I haven't covered, okay, doing the debenture interest and the discount after suspense. So I'm going to do that now, okay. So work in 16, I'll do the debenture interest. Okay, it's just like the mortgage interest. It was 240,000 by 7% by 3/12, which we worked out already, which was 4,200. Then it was 300,000 because of the increase at 7% for the remainder of the year, which was 9/12. That was 15,750 euro. You add those two together, that's 19,950 euro, and that is your penal expense for your debenture. Now, in this question here, easy math, we've already paid 4,2, so the outstanding amount due is the 15,750, and that is a current liability. Okay, really quickly, I'll just do the discount as well. Okay, I use this using a T account. Go back up to the trial balance. You see discount net there was 15,500. Okay, now if you go back up here to your suspense, you see that discount, a credit entry of 460 is missing. Okay, so we put in the credit entry of 460, which brings my discount up to 15,960. This is discount being received, okay, so therefore it's a gain. All right, so that's your debenture interest and discount from the suspense done, okay? I just forgot to do it. So now we can go back here to VII, and that company being revalued, the land and buildings and depreciation to it had been done, all right? Okay, so we go now onto working 18, I believe. Yeah, okay. So working 18 is something you would never seen before, lads. It's your bank reconciliation. Okay, so here we simply are looking at your own bank account. Okay, so these are your, say, your bank books. Okay, and this is the bank statement from the bank itself. What simply happened here is that you have a slight discrepancy in that the two figures don't match up, but there's very good reasons for it. And you can see here part 1, 2, and 3 of VII explains exactly as to why. The first thing they say is that, okay, you take the bank figure from our own bank account, and it's an overdraft there you can see of 60,000. Okay, and they're telling us that the bank statement is showing us a slightly different overdraft of 62,280 euro. Okay, so what are the reasons behind this? Well, it says, first of all, a check received from a debtor. Okay, so we received a check from a debtor for 5,600 had been dishonored by the bank, which means it had bounced. In that case, then, that 5,600, okay, has not been taken away from our overdraft. So in this case here, we must, in our own bank, increase our overdraft by 5,600 once again. Now, they have been declared bankrupt and they've now given us a credit transfer, okay, of 30 cent of every euro for that debt. So 5,600, okay, multiplied by 30 cent or 30% is 1,680. So I've received that, so that's a positive figure because it's reducing my overdraft. So these two here are to do with the first point of that. Second thing it says is a direct debit to a local refuse company. So this is money coming out of my account. 860 had not been recorded in our company books, in our own books. So this is a increase in my overdraft by 860 euro. And that is to do with point 2. Okay. The third point then says a check for fees 2,500 issued to a director had not been presented for payment, which basically means they have not given it to the bank. So the bank are unaware that there's a check of 2,500 outstanding. So in that case then, the bank, we need to correct the bank account and increase the bank's figure of an overdraft of 2,500. So that there is to do with point 3. Now, we hope that these two match up, and in this case they do. So 64,780, and this is also 64,780. And these both here are overdrafts, and they match up, so we know that we're correct. So my bank figure that I'm going to bring into my balance sheet is a bank overdraft, okay, of 64,780 euro. And because it's an overdraft, we know it's a current liability. When you're seeing a bank reconciliation statement, the only corrections you have to do, lads, is what's on your own bank account, okay? So we need to correct this first point, and then we need to correct the second point, okay? So the first one here is to do with a debtor, okay? So 5,600. So let's go back up to our debtors. Where are they? There they are, working 9, okay? Now, what's happening here is, all right, that I'm increasing my debtors by 5,600 because their check was dishonored, so that debt is back on the table now. But then they went bankrupt, so I minus the 5,600 from it. So in essence, nothing has really happened, okay? But I have now a bad debt, you see. So now I must open up a bad debt. So my working here that I'm going to open up is working 19 is a bad debt. And bad debt, as we know, is a selling and distribution expense. If I was owed 5,600, but I only got 1,680, well, the difference between the two is a bad debt. In this case here, it's 3,920. So that figure there of 3,920, okay, is a selling and distribution expense. All right, and that's that first working taken care of. That's simple. Okay, the next working that I really have to take care of, okay, actually I have it already open, is the 860. Okay, so that is obviously money coming out of my bank account, but where is it going towards? It's going to refuse. So we can go back up and put that into wages and general expenses because it fits the bill for general expenses. So as you can see up here, okay, what I can do is I can just take that away, okay, because I need to now increase my general expenses by 860 euro, which then gives me a new figure of 246,620. Okay, and that's my new admin expense for general expenses. All right, nearly there now, boys. Okay, so the last couple of workings here, all right, is to do with IX. Okay, it says here that provisions should be made for both investment income and debenture interest due. Thankfully, all done. Okay, we need to adjust our bad debts provision. So provision for bad debts. So they want me to adjust to 4% to debtors. So I need to go back up to working 9, wasn't it? Okay, my debtors figure. Okay, and my debtors figure now. All right, so I'll do a bit of math there. So it's 98,200 minus 75, and that plus and minus 56 cancel each other out. So my debtors figures there is 90,700. Okay, and as we know, that's going to be a current asset. So we bring that figure 90,700 down here, and we multiply it by 4%. And 90,700 by 4% is 3,628. Now there was an old provision in the trial balance, and the old provision was 4,000 euro. The new provision is 3,628. So the difference between both of those is 372. It's a decrease in the provision, therefore it's a gain. All right. Now, secondly, last, it says the managing director should be paid a bonus commission on 5% of all sales. So, working 21 was commission. So we need to get the sales figure. Now we had sales opened up because we had to adjust it due to the sale of return. And there it is there. So sales, okay, when I subtract that 7.5 from it, I get 1,582,500. Okay, and that's obviously going to go into the trading account, but I need to take that figure Okay, and bring it down here because I need it, because I need to work off 1582,500. Now it says they're going to get commission on anything in excess of 1.2 million. So if I take 1.2 million away from that, you're left with 382,500. And they're going to get commission of 5% on that. So 382,500 multiplied by 5% gives us 19,125 euro. Okay, commission is a selling and distribution expense. All right, and the last thing here they ask us to do is to transfer 10 grand from profit med, okay, to the capital reserve. Okay, this is really easy working, gents. You can see capital reserve is the last line in the trial balance. It used to be 45,000. I say used to be because I'm now going to bring 10,000 into that from our net profit, which is 55,000. And that will go into your finance buy section. Important to note, lads, that this 10,000 you'll be taking it away from your net profit in your P&L. Okay, so it's worth noting also that that has to be done in the P&L. All right, lads, that's all your workings done there.